This is Mark Chaikin. Can everybody hear me? If you can, please type a Y in the chat box or the Q&A window, because we may have a technical glitch.
Sorry, I think we got it. Can you hear me now?
Yeah, David. Okay.
All right. Sorry about that. Good afternoon. My name is David Schulin here at Chaikin Analytics, and I'd like to welcome you to the best stocks to buy right now. Our presenter today is Dan Russo, Chief Market Strategist at Chaikin Analytics. Chaikin Analytics is not registered as a broker-dealer or investment advisor, either with the U.S. Securities and Exchange Commission or with any state securities regulatory authority. Chaikin Analytics is for educational purposes only and is not a trade advisory service. Past results of any trading system or methodology do not guarantee future results. Be sure to submit your questions through the webinar using the Zoom Q&A window, which you can access in the upper left-hand corner of your screen. I will be available to respond to your questions. This webinar is being recorded and a replay will be sent to all registrants. Now, Dan Russo started his trading career as a specialist and member at the New York Stock Exchange. Prior to joining Chaikin Analytics, Dan was an institutional sales professional where he combined the firm's fundamental analyst research with his own technical analysis to generate trading and investing ideas for hedge funds. To kick off this afternoon's webinar, I'd like to turn things over to our founder and CEO, Mark Chaikin. Take it away, Mark.
Thank you, David, and welcome everybody. Dan Russo joined Chaikin Analytics as Chief Market Strategist 6 months ago, and in that time, he's earned my respect. He came to us with a deep expertise in technical analysis and an awareness that fundamentals matter. And by combining the Chaikin Power Gauge rating with the other unique parts of Chaikin Analytics, Dan has developed his own top-down methodology that has consistently delivered winning stocks on both the long and the short side. Dan writes our morning market insights, and it's with great pleasure that I introduce Dan Russo, our Chief Market Strategist and my good friend. Dan, take it away.
Thank you, Mark, for that warm intro, and thank you, David, and thank you, everybody, for taking the time to join us today. So today we're going to go over the best stocks to buy right now. You know, the market's trading at all-time highs, and we want to kind of look for the best ideas in the marketplace right now. But before we get started, a little bit about myself. I've been on Wall Street for about 18 years, and as David mentioned, I am a former New York Stock Exchange market maker. I was a member at the New York Stock Exchange. I actually started working down there when I was 16 years old as a summer intern. And I worked every summer until I graduated college and was fortunate enough to have been offered a job down there upon graduation and worked my way up through the ranks. And when I was 27 years old, I became what was then known as a specialist. Today, they're known as market makers, where I would trade my firm's capital to make a market in the stocks that were assigned to us by the New York Stock Exchange. And after doing that for a while, I transitioned off the floor of the New York Stock Exchange, and for 10 years prior to joining Chaikin Analytics, I was on an institutional sales and trading desk covering large institutional investors. Think, mutual funds, hedge funds, pension funds, mostly in New York and Connecticut, but really all over the country. And it was in that time that I became a chartered market technician. And basically what that means is I'm a recognized expert in technical analysis. I spent about 3 years studying for 3 different exams that over the course of those 3 years, I passed to earn the designation of Chartered Market Technician. And shortly after that, the CMT Association, which is the group that administers the exam and gives out the designation, asked me to become chairman of the New York chapter, which I was blown away by that. It was a great honor because, as you can imagine, the New York chapter, just given its proximity to Wall Street, is the largest chapter in the world. So I'm currently the chairman of the New York chapter of the CMT Association, a practicing chartered market technician, or CMT. I'm also a frequent guest on Bloomberg TV. In my bio shot, I like to use this one. It's actually an action shot of me on the set of Bloomberg in their headquarters in New York City. And you can see I was actually making a bullish call on the S&P 500 while it was at 27.26. So it's nice to go on TV and have those calls work out. So that's a little bit of the background on me. And it was really, back in February, as Mark said, I've been with the firm for about 6 months. It was back in February where I was on the sales desk that I received a call from Mark Chaikin, and he introduced himself. And the first thing that came out of my mouth was, Mark Chaikin, like Chaikin Money Flow? And he said, yes, like Chaikin Money Flow. But I've also been working on something else. And he walked me through the Chaikin Power Gauge, which is a 20-factor model for rating stocks. And he asked me if I'd be interested in coming down to Philadelphia. I'm actually a New York guy. He asked me if I'd be interested in coming down to Philadelphia to meet and kind of walk through the model. And of course I was interested, right? I mean, I spent 3 years studying technical analysis and a lot more before that. So, needless to say, I'd seen Mark's name repeatedly throughout the curriculum and all the books that I was reading. So, literally jumped on the next train from New York to Philly to go down to meet Mark and his team. And as he was walking me through the Chaikin Power Gauge, something struck me. And it was the factors that go into making up the model behind the Chaikin Power Gauge are the exact same factors that my institutional investor clients look at when they're making their investment decisions. So needless to say, I was intrigued. On March 1st, I joined the firm. It's been a great move. I could not be happier since joining Mark and his team at Chaikin Analytics. And what I want to walk you through today is the keys to my stock selection process. As Mark said, I write our Morning Insights newsletter every day. And every day in that newsletter is a stock idea, either a bullish idea or a bearish idea. So it serves me well to have a repeatable, simple process that I can use every day when I'm writing my note to generate actionable bullish and bearish ideas for Chaikin's clients. And really what that boils down to are 4 key points. Number 1 is I try to identify the strongest and weakest areas of the market. When I do that, I think very thematically. I look for trends and themes that have a high likelihood of persisting over time. From there, we want to buy bullish power gauge stocks when they become oversold. And we want to avoid bearish power gauge stocks, or even buy put options on bearish power gauge stocks when they become overbought. And we use proprietary signals to enhance our performance to help us with entries and exits. So first, before we kind of get into the process, we need to be aware of what to focus on for the balance of 2018. And at the top level, we want to focus on the trend in corporate earnings. And they've been nothing less than phenomenal, right? The second quarter earnings season just wrapped up. And as it stands right now, we're looking at about 25% earnings growth year on year. And that was after the first quarter was over 20%. For third quarter, analysts are projecting another quarter of 20% earnings growth. So the trend in corporate earnings is strong. From there, we're taking a look at interest rates, right? And the Federal Reserve has basically told you that they are going to continue to raise interest rates. The environment is ripe for them to raise interest rates. And what's interesting to me is the media harps on the fact that rising rates are a negative for the equity market. And that's patently false in the current environment. I've actually dug in. As I said, I like to think thematically, and this is one of the things that I look at every day. When rates are below 5% and rising, that's actually an extremely bullish scenario for the market. The market is higher in that environment. Rising rates, i.e. rates are higher now than they were 1 year ago, but still less than 5%. In that environment, the market is higher 1 year later, over 80% of the time. So do not let the media trick you into thinking that rising interest rates are a negative or a headwind for the equity market. It's just not. So that's the big picture. And then from there, we look at stock, sector, and group strength and weakness, and then focus on stock selection. So the likely scenario, as I said, for 2018 is higher rates and rising earnings. This is the scenario that we expect. And as you can see in this chart from B of A, Merrill Lynch Global Investment Strategy, this is actually a bullish scenario. So we've had a bullish tone here at Chaikin Analytics for most of 2018, our view had been that the market was from the January highs, the market was consolidating within the context of a secular uptrend and was likely to resume to the upside. And that's exactly what's beginning to play out. That's what we saw last week when the market took out the January highs back here and rallied to about 29.15, 29.20 before backing off a bit. And so far, we're holding above that breakout level. But to me, what's important to understand here in 2018 is that it's a much different environment than what we had in 2017, right? 2017, and in particular, the last quarter of 2017 was a steady uptrend. Mark likes to call it an uptrend on autopilot. And in that environment, you can feel pretty comfortable owning just about any stock and riding that wave higher, or being long, some market-based ETFs and riding the wave higher. And then we got this ramp up into the beginning of the year, and then it's been choppy trading throughout 2018. Now, the trend in 2018 is higher, but it's taking a much different trajectory than what we saw in 2017. And this choppy trading that we've seen throughout this year signifies to me one thing. It has become a stock picker's market. It's no longer okay to just, buy a basket of stocks and ride that wave higher. Stock selection has become extremely important. And we're going to walk through my stock selection process today. And, as I said, the market's breaking out, and that move was confirmed by money flow. So institutional investors are behind the trend that we're seeing here. So let's kind of walk through the stock selection process. But before we do that, there's something we need to understand. We are bombarded as investors with a flood of information, a tidal wave of information. If you're remotely involved in the equity market, chances are when you open your email every morning, you have a flood of emails with different trading advice or investment ideas, whether you're watching CNBC or Bloomberg, or if you're on any of social media, it's coming at us from all angles. And in that environment, our emotions can really take over and cloud our investment judgment. And what I think is the solution to that is Chaikin Analytics. And Chaikin Analytics is an application for desktop and mobile that helps kind of deal with that information overload that we all experience as investors, right? It utilizes the Chaikin Power Gauge to provide simple, done-for-you research to give you an objective view of stocks and their likelihood of outperforming the market. And the model, the Chaikin Power Gauge, is 85% fundamental and 15% technical, which is really interesting, right? Because Mark Chaikin's a well-known technical analyst. His career has been defined by technical analysis to a large degree. There are technical indicators named after Mark, right? I told you I studied all about them as I was becoming a CMT, but Mark recognized something. He recognized that fundamentals drive the market, but emotions drive the market to extremes. And in an environment like that, the path to profits is actually a combination of the two disciplines. And this is actually something that I, as a technician, could not agree with more. When I sat on the institutional sales desk, most of my clients were fundamental analysts and portfolio managers, right? I understood that it was the fundamentals that drive the market. And my value add and my differentiator was my technical analysis, utilizing the tools that I had acquired when becoming a chartered market technician. So when I was in that role, I had an entire department of research analysts looking at companies and their stocks and making, kind of investment recommendations. And from there, I layered on my technical analysis to come up with actionable investment and trading ideas for my institutional clients. And essentially, what I'm doing here now is the exact same thing, except instead of having a department of fundamental research analysts, I have the Chaikin Power Gauge. It's a simple but powerful GPS for navigating the market, right? You can see it here. It looks like the gas gauge on your car. It moves from very bullish to very bearish to give you, in a quick glance, a stock's likelihood of outperforming the market or underperforming the market over the next 3 to 6 months. So this has essentially become my department of research analysts, and then I overlay my technical expertise on top of that. And in fact, John Carter, who's the CEO and president of Simpler Trading, he's a very well-known technical analyst, called the Chaikin Power Gauge an objective awesome meter for stocks. And he liked that it includes fundamental and technical analysis for stock selection and timing, right? 20 plus technical and fundamental factors to anticipate a stock's profit potential. That really got his attention, but let's kind of take a look at what it was that got John's attention. This is the Chaikin Power Gauge. It helps you know where a stock is headed. It's a clear, tested summary of a stock's potential. And as I said, it's 85% fundamental and 15% technical, right? The financials portion of the model are what value investors look at, right? And when we think of value investors, the first person that comes to mind is Warren Buffett. And if you've read any of his books or studied his investment process at all, these are the factors that he looks at before making an investment. Long-term debt to equity ratio, the price to book value, the company's return on equity, their price to sales, and their free cash flow. Value investors, this is where they are focused. Your growth investors, right? Your investors who are going out and buying the FANG stocks, Facebook, Apple, Amazon, Netflix, and Google, this is where they are focused. They're looking for earnings growth. They're looking for positive earnings surprises as a catalyst to move the stock higher. They're looking at the trend in earnings, right? Are earnings continuing to rise year over year, or are they slowing down and starting to turn over? And really important, one of my favorites is earnings consistency. How consistent is the company at meeting or beating Wall Street expectations? That is the sign of a quality company, a quality growth company over time. From there, we overlay the technicals, right? We look at the price trend. We want to know how the stock is performing relative to the market. We want to know what Chaikin money flow is, because that tells us what institutional investors are doing, my former clients. And we're looking at the rate of change of that price trend. And then like the added bonus in this model that really blew me away was the experts portion of the model. And this is really sentiment, right? Because how often have you seen a stock report really good numbers after the close, and then the next morning it trades down 5%, 10%? That is sentiment. The stock traded down because sentiment was too bullish. And even though they had good results, they weren't good enough to meet the bullish expectations and the bullish sentiment. We take that into account when we're building the model. It's, this is what investors, institutional investors, spend a tremendous amount of time trying to get a gauge on. They talk to as many people as possible to try to get a feel for sentiment around a stock that they own, especially around earnings. We incorporate that into our model. And as I said, these are the factors right here that the investors that I spent 10 years covering and learning from and speaking to on a daily basis, these are the factors that these professional investors are looking at constantly, and we roll them all up into a model that is simple and easy to understand. The Chaikin Power Gauge cuts through the clutter. You log into Chaikin Analytics, you type in a ticker symbol, and you get a clear view of the stock's potential. And you get a clear view of what's driving that model: financials, earnings, technicals, and experts. The Chaikin Power Gauge plus the investment process that I'm going to share with you now gives you an edge. We like to call it the Chaikin directional edge, right? Because when you combine fundamentals and technicals into a quantitative, objective model, and then layer in our proprietary buy and sell signals and Chaikin money flow for better entries and exits, you set the stage for investment success and outperformance despite the market environment. And the numbers here speak for themselves. This is data going back to the beginning of 1999 until the end of 2017. So 18 years worth of data on the Chaikin Power Gauge. And what it tells us is our very bullish stocks on average return 20% a year in that time frame. Our bullish stocks on average return 12% a year in that time frame. Now compare that to the Russell 3000, which in that time averaged about 6.36% a year. And the average stock on an equally weighted basis returned 9% a year. This is the type of outperformance that will grow your portfolio over time when you utilize a simple, repeatable process. And just as importantly, and this is really important to me as someone who looks at both bullish ideas and bearish ideas, our very bearish stocks drastically underperform, and our bearish stocks drastically underperform because in a stock picking environment such as we're in now, it's not just the stocks that you own, but the stocks that you avoid that are really going to make a difference in your portfolio. Avoiding the landmines sets you up to be aggressive, to go after the very bullish and bullish stocks when the right conditions present themselves. So I'm going to start to walk through my top-down process now. And as I said, it all starts with the power gauge, right? If I'm long ideas, I'm going to be focused on those very bullish and bullish stocks. And then from there, I look at industry group strength. And this gets to the thematic view that I take. As I said, I'm looking for industry groups that are in trends that are likely to persist for the next 3, 6, 12 months. From there, once we've identified strong stocks within strong groups, we want to look at Chaikin money flow because Chaikin money flow, as I said, gives us a clue as to what the institutional investors are doing. We want to be on the right side of those institutional investors, and the Chaikin money flow indicator that Mark Chaikin created helps us do that. And then from there, we look at Chaikin relative strength because for our long ideas, we want to own the names that are outperforming the market. And for our bearish ideas or just names that we're going to avoid in general, that group is going to be the group that is underperforming the market. But it's not enough to know what to buy and what to avoid. Our signals help you with the buy and sell decisions in the here and now. The tactical entry portion of the model are our proprietary signals, and they are unique to Chaikin Analytics. So let's start with the type of stock that you want to buy. And we actually have a template for this. It's called the Chaikin Classic Bull. It has either a bullish or a very bullish power gauge rating because as I showed you, those are the stocks that are most likely to outperform over time. From there, we want strong relative performance and strong Chaikin money flow. And I have a great example of a Chaikin Classic Bull, and it's Centene Corp. It's a medical care company, right? And the done-for-you research tells us that the Chaikin power gauge has a very bullish rating. Tells us that their stock is in a strong trend and it's within a strong industry. So there's that thematic view, those enduring trends that I'm looking for. And you can see here, relative strength versus the SPY. The stock has pretty much been outperforming the market for most of the past 12 months. And here's money flow. Strong bullish money flow tells us that institutional investors have been buying the stock, and they've been buying the stock the entire way up. In fact, in my morning note to Chaikin Analytics members back in early July, I made this my bullish stock of the day. The stock was around $120, and it closed yesterday at $146.55. So that is a Chaikin Classic Bull, a very bullish or a bullish stock that's leading the market with bullish money flow. And the flip side, the template for what we want to sell or what we want to avoid are the Chaikin Classic Bears, and it's just the opposite. A very bearish or a bearish power gauge rating, weak relative performance, and weak Chaikin money flow. And a great example of this is literally a household name. This is a chart of Whirlpool, ticker symbol WHR. You probably have their products in your home, or you've had them in your home at one point or another. And look, they're great products, but that doesn't mean that the stock is great. There's a difference between the stock and the company, and the Chaikin power gauge lets you see that. Power gauge was very bearish. So the done for you research right away tells you that this is a stock that you do not want to own. We can see here that Whirlpool has been underperforming the market for most of the past 12 months. And throughout that time frame, institutional investors, look at these mounds of red. Institutional investors have been unloading the stock throughout the entire downtrend. You might turn around and say, well, you could have been sitting here in April and said, well, the stock is down from about 190 to close to 140. It might make sense to buy it. No, the power gauge rating was very bearish the entire way. The stock was underperforming the entire way. This is a stock that you knew you wanted to avoid. But as I said, knowing what to buy and knowing what to avoid are a great starting point, but they are not enough for investment success. Timing your buy and sell decisions is critical, especially in an environment such as 2018, which has become very choppy. We're no longer in an uptrend on autopilot. It is a choppy environment, and knowing when to get in and when to get out are really important. And we actually help with that. We have 6 sets of proprietary buy and sell signals that tell you when to buy a stock and when to sell a stock. And those are available to you every day within Chaikin Analytics. But look, and one of the ways that we do that is we alert you via email when a signal has triggered. When you're looking at stocks within Chaikin Analytics, we give you the opportunity to set up a watch list. So once you've identified those classic Chaikin bulls that you want to look at as a potential long idea, you can create a watch list and set up an email alert. And when one of those signals triggered, you'll be alerted to it in the morning. You wake up in the morning, check your email, you'll see that one of your stocks triggered alert, letting you know that now is the time to get involved. And a great example of this is Citrix, right? Citrix is in the software space. It's a space that I've been extremely bullish on for my entire 6 months at Chaikin Analytics. And I've been watching the stock, waiting for a setup. So I have it on my watch list. On June 26th, in my email alert, I see that Citrix triggered one of our buy signals. In this case, an oversold buy signal. Here's this arrow here is an indication of when I received that email, and we made it a bullish idea at Chaikin Analytics. The stock was around $104. A few weeks later, they reported earnings. The stock gapped up and actually traded over $115, and subsequently has traded a bit sideways, trading at $112 now. But a winning trade that I was alerted to via Chaikin Analytics when that signal was triggered. And you can see the setup here, a bullish stock outperforming the market with bullish Chaikin money flow, triggered a signal to let me know now was the time to buy. So essentially what I'm talking about here is what we like to call the ideal setup. Right? Warren Buffett has a famous quote. He said, "They don't call balls and strikes on Wall Street, so you don't have to swing at everything. You can wait for your pitch." I have a lot of friends who work in the technical research department at Fidelity up in Boston, right? The large mutual fund complex. And their saying for it is, they call it the Fidelity fat pitch. Whether you want to call it the ideal setup, whether you want to call it the Fidelity fat pitch, whatever works for you, what we're looking for is we want to buy the strongest stocks in the strongest parts of the market at a time that gives us the highest likelihood of having a successful trade. And the way we do that is we focus on what we like to call the dynamic duo. It's a combination of the Chaikin power gauge rating and Chaikin relative strength, because it finds big winners and losers. Because we know that superior returns come from stocks that outperform the market, right? I mentioned Fidelity. I covered a lot of big mutual funds in New York. And those mutual funds, what's important to understand is they are measured on how they perform relative to a benchmark, right? It's not enough for them to be up on the year. They have to be up more than the relevant benchmark. So if their benchmark is the S&P 500 and the S&P 500 is up 10% on the year, those portfolio managers are looking for stocks that are going to be up 15, 20, 30% on the year, because that's where the superior returns come from, which is why we like to say that relative strength stands alone as a bullish or bearish indicator, and it is really important to the investment process that I go through every day at Chaikin Analytics. So as I said, I think thematically, let's start to walk through my process. I'm going to take you now through my thought process as I put together bullish and bearish ideas for our clients at Chaikin Analytics. So one of the big themes that I've been focused on throughout 2018 is something that I like to call the retail renaissance. As a matter of fact, last November, the day before Thanksgiving, I was invited to come on to Bloomberg TV. And when the host asked me, what we should talk about, I said we should talk about retail stocks. And she found that interesting because at that time, retail stocks were left for dead. Right? The most crowded trade amongst professional investors was everybody owned Amazon, and everybody was either short or underweight the brick and mortar retailers. And that was something that just didn't make sense to me. From a sentiment standpoint, it got overdone. So I went on Bloomberg TV and I said, listen, I love Amazon. It's a great company. We want to stay long Amazon, but I think it makes sense to no longer be short those retailers. And, a funny thing happened about a month later. The retailers began outperforming relative to the S&P 500, and they started a steady uptrend higher. And throughout 2018, the retailers have continued to outperform relative to the S&P 500. And since May, institutional investors have been flooding into the retail stocks. This is Chaikin money flow right here. And you can see that institutional investors have been buying the retail sector. The trend is up and to the right. You can see that, but our done for you research also tells you that the trend here is strong. So one of the stocks that was left for dead but has subsequently participated in the retail renaissance is Macys, right? You can see here that Macys began to outperform the market back in December, right around the same time as the XRT. I joined Chaikin Analytics in March, right? So back in May, I actually made this my bullish stock of the day. Why? Because it was a bullish stock that was outperforming the market. So our dynamic duo was in gear, or we like to say as well, the market and the model were in agreement. The stock became oversold based on our proprietary overbought, oversold indicator, but money flow was strong. Institutional investors were buying the stock. So around $28, I made it my bullish stock of the day for Chaikin Analytics members. A few days later, they reported earnings. The stock gapped higher, ran to about $33, on its way to $41, $42. So that is my process in action. And what's interesting to me here is that right around the time that everybody was leaving the retail sector, an ETF was launched that was bearish on retail stocks. Its ticker symbol is EMTY. It stands for empty, as in the stores are empty. That was a great sentiment indicator. Remember, I told you we incorporate sentiment into our model. So Macys was a great example of my process in action, but we want to talk about stocks to buy now. I'm still a believer in retail because I think that trend is an enduring trend, and it's a theme that I want to continue to focus on. ROST Stores is a stock that I made my bullish stock of the day less than a week ago. It's a bullish stock that's leading the market. It's become oversold with bullish money flow. And here's the setup here. We like to read the chart from the bottom. The ribbon tells us where the power gauge is and has been over the course of the past 12 months. So you can see we have a bullish stock that is outperforming the market. That dynamic duo is in gear. The market is in agreement with the model. The stock has become oversold with bullish Chaikin money flow. And you can see a couple of days ago, it triggered one of our signals, a momentum breakout signal. So I rolled all this up, and in my morning note to Chaikin Analytics members, I made ROST Stores my bullish stock of the day. I actually still think the setup here is compelling. This chart is as of yesterday, so the setup is still in place. I like ROST Stores as a stock to buy now. And how can we talk about retail without talking about Amazon, right? It eclipsed that magical $1 trillion mark recently. But again, we use the power gauge because it's objective. We want to cut through the noise and the media hype of crossing over the $1 trillion mark. So what's interesting to me is that Amazon actually has a neutral rating. It's not a name that we want to own here and now. But back in early August, it was. Back in early August, the power gauge rating on Amazon was bullish. Amazon was outperforming the market and became oversold with bullish money flow. It triggered an oversold buy signal on this move down to the rising long-term trend line, at which point I alerted Chaikin Analytics members that now was the right time to buy Amazon. The stock was around $17.50, on its way to over $2,000 and that $1 trillion market cap. But as I said, here and now, is this a stock we want to own today? No, it has a neutral rating. We want to focus on our bullish and very bullish stocks, but here's one thing we can do. We find the derivative ideas. In my thematic thinking and how I look at the markets, and something I learned from covering professional investors is it's really important to know who else is impacted when a major stock is acting strong or weak. So in this case, I started thinking about, okay, Amazon has had a good run, but now it's neutral. Who are some of the other companies that are derivatives on Amazon? And I came up with UPS, right? I don't know about you, but at least 3 days a week, that UPS truck pulls up in front of my house. I have 2 young daughters. About 80% of what I buy for them, I buy on Amazon. So 3 days a week, the UPS truck is in front of my house, but that's neither here nor there. The done-for-you research tells us that this is a stock that we want to own. It's a bullish stock with a strong trend in a strong industry. Here's that bullish rating. Back in late July, UPS began to outperform the market. It became oversold with bullish money flow and triggered one of our signals, an oversold buy signal, at which point I told Chaikin Analytics members that I liked UPS as a bullish idea. The stock was around $116, closed yesterday at $124. This is a name that I still like. This is a recent long idea within Chaikin Analytics. One of the other themes that I've been focused on is software. Mark Andreessen, famous venture capitalist, a few years ago coined the phrase, software is taking over the world. And another really smart investor, Howard Lindzen. Howard ran a hedge fund and is now a venture capitalist. He's also the founder of StockTwits. He had a riff on that phrase. He said software is eating the world. However you want to talk about it, software is in an uptrend. This is an enduring theme that's likely to last for the foreseeable future. This is something that I'm focused on. And here our research tells you that the trend is strong. I mean, you can see it here. You don't need us to tell you that, but the trend is strong within software. And as an interesting aside, actually, Howard, as I said, he started StockTwits and recently tweeted out, I was really honored that I was a must follow on Twitter and StockTwits. So I was really honored to hear that. And I'm in his camp when it comes to software. I'm bullish on software. And again, here's my process. This is Adobe Systems. It's a name that we all know, right? It's been outperforming since last November. But back in early May, the stock had a bullish rating, was outperforming the market, and was oversold with bullish money flow. It triggered a relative strength buy signal with the stock at around $220, at which point I made it my bullish pick of the day, on its way to a high of $260 before pulling back to test the $240 level. And here's one that's been a recent idea. Checkpoint is within the security software space, and you can see it's a name we want to own. A very bullish stock with a strong trend in a strong industry. Began to outperform the market in July, but at that point, the timing wasn't all that compelling for me because the stock was overbought. However, in early August, we had a very bullish rating. Stock was still outperforming the market, except this time the stock was oversold with bullish money flow, triggering one of our proprietary signals to let us know that now is the time to act. At that time, the stock was around $111. As I said, it's a recent trade. Stock traded up to $116 yesterday, and it's still one that I think has room to the upside. As I said, that trend in software is enduring. We want to find the names that are outperforming within the strongest parts of the market. Another theme that I've had, and this is really important, right? Because I just showed you retail. I just showed you software. Now I'm going to talk about small caps. One of the keys to any process is making sure that it's robust across industries, sectors, and market caps. And small cap outperformance had been a major theme since March, and it's kind of whittling down now. But this is the IWM, the iShares Russell 2000 ETF, and you can see it began to outperform the market in March, and did so for April through the August timeframe. And throughout that timeframe, you can see institutional investors were buying small cap stocks. You can also see that the IWM, the Russell 2000, broke the January highs long before the S&P 500 did. So when I looked at this thematically, I said, well, we want to look for long ideas within the small cap space. So one of the ideas that I uncovered was Blue Cora, ticker symbol BCOR, which back in early May had a very bullish power gauge rating, was outperforming the market, but it had become oversold. Triggered our buy signal, and then 3 days later when they reported earnings, the stock gapped from $24 to $30 on its way to 40. And you can see here now as it's kind of gone sideways, institutions are starting to unload. It's no longer a very bullish stock, so it's not one that we want to look at here and now, but it's an example of my process in action, and it's an example of how robust our model is and how robust my process is across market caps and across industry groups. Here's another one. I told you I liked small caps. I told you I like software. When we rolled all those up, we got a powerful combination here with Perficient, ticker symbol PRFT. Began to outperform the market in March, but in April it became oversold, triggering a buy signal, in this case a money flow buy signal with the stock around $23. Closed yesterday at $28.64. Still an outperformer, still very bullish, but currently overbought. So not one that we want to look at now, but this is definitely a name that we want to monitor within Chaikin Analytics, because when it becomes oversold, it may set up a compelling entry point once again. So these are the types of setups and the types of process that helped Ken, one of our subscribers, take an account at the beginning of 2017 from $235,000 to $1.2 million over the course of 7 months. He said he'd been trading stocks and options for many years without much success. And then in early 2017, he found Chaikin Analytics, started the year with $235,000. And as of July 30th of that year, Ken was up to $1.2 million. And he said he would not have been able to achieve this without our system. Another big trend that I'm focused on is healthcare, right? Baby boomers are starting to age, right? Society in general here in the US is getting older. I think healthcare as market leadership is a theme that is going to be in place for a while. My research tells me that. So within there, healthcare services has been leadership. This is the XHS, the S&P Spider Healthcare Services ETF. It's been outperforming the market throughout 2018, and you can see predominantly bullish money flow. So institutional investors agree with this. Institutional investors are buying these stocks even as they trend higher. So this is a theme that I've been focused on. It led me to long ideas like Wellcare Health, ticker symbol WCG. Done for you research. The power gauge tells you it's very bullish. Strong trend, strong industry. Been outperforming the market since April. Back in late July, when the power gauge rating was very bullish and the stock was outperforming the market, it became oversold with bullish money flow and triggered that oversold buy signal. It made it my stock of the day in my morning note to Chaikin Analytics subscribers at about $244. Stock closed yesterday at $303.67. Again, I also like small cap stocks. So an enduring theme in healthcare, here's small cap. LHC Group, ticker symbol LHCG. I identified this to Chaikin Analytics subscribers in early May, right? It was a bullish stock outperforming the market that became oversold. Triggered our sell signal, our buy signal rather, at around $70. Stock closed yesterday at $100. And finally, AtriCure is another great example of our process and the robustness across market caps. AtriCure is a small cap stock that's been leading the market since March, when it became oversold in early April with bullish money flow and triggered our signal. I flagged it at $20. Stock closed yesterday at $34. That's up over 60% in a few months, following a simple, repeatable process utilizing the Chaikin power gauge and the Chaikin signals to time our entries. So you might say to yourself, well, that's great, but how do I find all these ideas? Am I really going to go through 5,000 names to find the stocks that are, oversold with bullish money flow? And the answer is no. Our screening feature allows you to quickly whittle down the investment universe to actionable ideas. And this is actually one of my screens. And I'm giving away a little bit of the secret sauce here, but this is a screen that I use every morning to look for bullish ideas for my morning note. I start with the Russell 3000, and incidentally, there are not 3,000 stocks in the Russell 3000, but roughly 3,000 stocks. But we only want the ones that are bullish and very bullish. So we get down to 610 stocks. From there, I look at some of the key factors that I know drive stock performance: earnings consistency, relative strength versus the market, and industry relative strength. I've now taken a universe of roughly 3,000 stocks and gotten it down to 112 stocks in 4 mouse clicks. From there, I want to buy the best stocks in the strongest part of the market when they become oversold with strong money flow, but are still outperforming the market. And me, as a personal preference, I like to look at stocks that are $10 and up. In less than a minute, I took roughly 3,000 stocks and whittled it down to 18 stocks to consider here and now as an actionable long idea. And this is actually a screenshot from a webinar that I did about a month ago, back in early August. And you can see NSTG, NanoString Tech, made the cut for the screen and actually triggered a buy signal that day. So that told me, okay, this is a stock we potentially want to look at. Here's NanoString. NanoString is a bullish stock that's outperforming the market that became oversold with very bullish Chaikin money flow. Institutional investors were flooding this stock. Here's that buy signal at around $11. Stock closed at $16 yesterday, up 5 points in a little over a month. We whittled down 3,000 stocks to 18 to find one that triggered a signal. Done for you research in a simple, repeatable process. But today is the start of the football season, and Chaikin Analytics is a Philadelphia-based company, so to pay homage, the Eagles are playing tonight. We know that good defense leads to good offense. And as I said earlier, it's the stocks that you don't own that put you in a good position to be aggressive, to buy the stocks you want to own. So one of the themes that I've been focused on is consumer staples, which have been lagging throughout the past 12 months. You can see here, this is the XLP, the Consumer Staples ETF. Underperforming the market for 12 months, and from January to June had bearish money flow. Some sector rotation led to a rally, and now it's beginning to roll over again. I actually think, in terms of what to trade now, consumer staple stocks are going to roll over again. However, in that time frame, one of the stocks that I identified to avoid or take a bearish position was Phillip Morris. So my same process works in reverse. In early April, Phillip Morris was a very bearish stock that was underperforming the market. It became overbought with bearish money flow and triggered an overbought sell signal 3 days before they reported earnings. Stock was at $100. I made it my bearish stock of the day in my morning insights newsletter. 3 days later, the stock reported earnings. It traded down to about $82 on its way to the mid 70s, rallied, triggered another signal, and it's back below $80. Repeatable, time and again. Here's a recent trade idea to take advantage of the same theme. I've actually had 2 bites of the apple with this one. Colgate, Palmolive, you have their products, right? You probably have their toothpaste in your bathroom. You probably have their soap in your kitchen. It's a very bearish stock. And in April, it really began to underperform the market. It became overbought with bearish money flow at which point I made it a bearish idea for Chaikin Analytics members. Stock was about $72. It subsequently traded down below 62. What's interesting to me here is that it's rallied with the consumer staples group, but it is now set up again. Very bearish stock, underperforming the market, became overbought with money flow turning bearish, and it triggered a relative strength sell signal a few days ago, at which point I flagged it for Chaikin Analytics members. Trend is weak. The industry is weak. Colgate Palmolive is a name that we want to avoid now or potentially take a bearish view, maybe buy put options. It's this process and avoiding these landmines that led Alex to tell us that this changed his life. I can't tell you how happy and grateful I am to have found Chaikin Analytics. I found you through Jim Cramer, and as a day that changed my investment life will sure change your life. We're helping you avoid these landmines that can really blow up your portfolio and make it hard to get aggressive when the time is right. And remember, I told you stock selection matters. I told you I liked retail. We went through examples of retail stocks that we want to own, but you can't just blindly buy any retail stock. Here's Dollar Tree. Retail's been outperforming all through 2018. Dollar Tree in February was at $115. In June, with the stock around $95, maybe you thought to yourself, oh, well, it's down from 115 to 95. Maybe it makes sense to buy the stock. Chaikin Analytics told you that that did not make sense. The answer there was no. Why? Bearish power gauge rating, underperforming the market. The stock became overbought with bearish money flow, and it triggered an overbought sell signal 2 days before they reported earnings. I made it my bearish stock of the day. With the stock at $95, 2 days later, they reported the stock traded down to 80. Rallied, gapped down again. Dollar Tree is not one of the retailers you wanted to own. Remember, I told you it's a stock picker's market. Use the power gauge to tell you which stocks to buy and which stocks to avoid. Gold is another example. Gold has been in a downtrend since its high in 2011, and I know a lot of people want to go bottom fishing in the gold stocks. Mark Chaikin will tell you that bottom fishing is the most expensive sport in America, and here is a great example of that. Here's Randgold, ticker symbol GOLD. Back about a year ago, this stock was $105. It's been in a steady downtrend ever since, underperforming the market the whole way. And most of that time, the Chaikin power gauge has been bearish or very bearish. Well, back in late March, when that bearish rating was underperforming the market, stock became overbought within the downtrend with bearish money flow. I made it a bearish idea at around $82. Stock closed yesterday under $65. Very bearish stock, weak trend, weak industry. These are the landmines that will help you avoid. When I was covering my clients on the institutional side, this is the type of name that a client would refer to me as a career killer. If an analyst went in and said, I think we should buy Randgold, and it went from $85 to $65 over the course of a few months, that's the type of trade that could end his career. Those are the types of trades that we're going to help you avoid because they are the portfolio killers. Finally, a lagging semiconductor company, right? There's been a lot of winners and losers within the semiconductor space. The big name that comes to mind is NVIDIA, right? It's been a monster performer, but you can't just blindly buy any semiconductor stock. This is Ambarella. Ambarella makes the chips that go into GoPro cameras, right? A lot of the action sports participants, use the GoPro camera to video themselves surfing, skateboarding, skiing. Well, there's a company that makes the chip that goes into that camera, and it's Ambarella. And while action sports video might be a great business, selling those chips is not. It's a bearish stock with a weak trend in a weak industry. And back in late May, the setup was there. Bearish stock underperforming the market, became overbought. A couple days later, triggered an overbought sell signal with the stock at around $54. They reported earnings, the stock gap lower. It's continued to head lower. And just last week, they reported earnings again that disappointed the street, and the stock continues lower still. So this is the platform that won us the 2017 Benzinga Global FinTech Award. all right, the power gauge rating, the signals, the relative strength, our proprietary overbought, oversold signal, really blew the team at Benzinga away. But what really put us over the edge is what I'm about to show you. And this is one of my favorite features of the platform, and it's called our discovery engine. It's kind of like a Netflix or a Spotify for stock ideas. What you do is you seed it with one ticker symbol. And I used Travelport here because I had made it my bullish stock of the day when it was $17. And it quickly ran to 20 over the course of the next 3 to 5 days. And we were getting some requests for other names, like what else I liked along that theme. So I loaded Travelport into the discovery engine and found 5 stocks that you could buy. Additionally, we found similar short candidates or names to avoid. And I'm highlighting limited brands here for a reason, right? Because this is another retailer, but it was a very bearish stock at the time. It was one we wanted to avoid, right? So I showed that slide during my last webinar in August. Right here, the arrow is pointing to limited brands trading about $32.50. Well, shortly after that, they reported earnings and the stock gapped lower, and it's done nothing but move lower ever since. But look, it was a retailer, right? But it was a very bullish rating that was underperforming the market. The market and the model were in agreement. It became overbought with bearish money flow. This told you that just because it was a retailer, you did not want to own it. Earnings came out, disappointed the street. The stock has trended lower ever since. The discovery engine is a great tool for finding stock ideas on the long and short side. So that is Chaikin Analytics. It is a proven stock selection system that helps you cut through the noise and identify the stocks that are most likely to outperform and the stocks that are most likely to underperform over the next 3 to 6 months. Now, normally, Chaikin Analytics sells for $21.95, and with that, you get the 20-factor model combining fundamental and technical factors, as well as that discovery engine that I really just told you for generating new ideas and identifying stocks to avoid. But something we're going to do is I went in and I asked the team, I said, we ran a special over Labor Day. I want to extend that special to the folks who are going to be on the webinar tonight. So our Labor Day special extension, an annual subscription to Chaikin Analytics for $15.99. This is the lowest price you're going to see all year. And for $15.99, you're going to get everything I showed you here, the power gauge rating, the screener, which I showed you for identifying the names that you want to own now. You also be able to generate options ideas. We didn't have time to get into options play today, but part of our platform helps you structure options trades, both bullish and bearish options trades, if that's how you choose to express your view. We've also made some additions to Chaikin Analytics, including intraday charting, so you can find the ideal time throughout the day to enter your long and short ideas. We also give you earnings detail, tell you when the company is going to report, what the estimates are, what they reported in the year ago time frame, as well as what they reported in the previous quarter. Remember, earnings are one of the biggest catalysts that drive stocks. And as an added bonus, and this is a really good one, you get Mark Chaikin's weekly market insights. It comes out every week, Sunday afternoon around 4 or 5 o'clock, and really gives you everything you need to know to set yourself up for the week ahead. And as you know, it's written by Mark. A lot of really good ideas in there. He has a bullish or bearish stock of the week, as well as the key investment themes that he is looking at. And that's a great added bonus. And finally, when you do become a Chaikin member, you will have members only access to our weekly strategy webinar on Mondays, which I host. You have unlimited coaching and support, including small group sessions and one-on-one coaching. And you'll also receive my daily morning insights, where I highlight the investment themes that I'm looking at, as well as bullish and bearish ideas every Monday through Friday. So as we said, normally it's $21.95, but we've extended the Labor Day special for our webinar listeners here tonight. Annual subscription to Chaikin Analytics, $15.99 for those who subscribe by midnight tonight. Our sales team is standing by if you have any questions. Thanks, everyone, for taking the time tonight.
Dan, thank you so much. Really appreciate you spending the time to go over how you find good ideas now and great ideas, great stocks to buy right now. In the chat window, if you look in the chat, you can see the link to go to chaikinanalytics.com/stocks, as Dan has there. It's also in the chat, to buy an annual subscription, an annual membership to Chaikin Analytics for only $15.99 per year. That is $596 off the normal retail price. You can also give us a call right there at that number, 877-978-6257. This is where you can reach our representative standing by right now at this exact moment if you give us a call. Again, if you sign up tonight, you can start off with one of our members-only onboard sessions tomorrow, Friday at 2 p.m. Eastern. Just one of the many members-only sessions given week after week, including idea generation sessions just a couple weeks ago. We had a whole session around the screens Dan Russo himself uses. Also timing sessions, sessions on options ideas, sessions on pre-market analysis each and every week for our members. And of course, the daily commentary from Dan Russo himself, including his stock picks of the day every single day, and the weekly commentary from Mark Chaikin. We appreciate you joining us here today. Please give us a call or stop by chaikinanalytics.com/stocks, and we hope to see you as members soon. Again, my name is David Shulin. Thank you so much for joining us. Have a great day, everyone.